Guys, it doesn't look great, man. Oh man, Bitcoin flat $96,000. But why am I worried? I'm going to break down exactly why I'm feeling a little bit fearful in this market and why you should be taking this stall a little bit seriously. I'm going to break down exactly whether I think this will pull back into some scary price targets, whether the market is overreacting, and a lot more. If you like these types of updates, smash up the likes. Don't forget to subscribe. Trying to get to 20,000 subscribers. So do please hit up the subscribe button and I'm going to drop the alpha for you guys. So you can see here Bitcoin sitting at 96,000, right? And when you look at these daily charts, yes, the last 4 days here have been doji candles, right? If you've not taken my TA course, you're going to want to do it. These candlesticks are called dojis. They normally represent indecision in the market, right? These 4 days have been insanely volatile. Look how big the candle wicks are. Lots of people have been getting liquidated over the last 3-4 days. But what's been certain is we've not had a green day since last Monday, the 3rd of Feb, right? And this market is starting to show signs of exhaustion, frustration, annoyance, and more importantly, like I shared in a previous video, we're not seeing capital inflows into crypto. Now, we can get into various different discussions around why money isn't flowing in. Will it eventually flow in? Does it matter? But the reality is we need to look at the chart in front of us. And I'm going to start off with some TA, then we'll talk about some macro, and then we'll talk about some fundamentals. If you appreciate that, then you've got to hit the subscribe button. So the first thing I want to share with you here on the daily chart is a little bit of a worry, right? And that is that we're seeing divergence in the chart. Divergence, or in this case, RSI divergence, is where you see the price action trending to one side, which is a slight steep uptrend, right? You're seeing the price action kind of go up here on the chart. You can see that going up. But look at the RSI. The RSI is showing a downtrend. Okay, now when you see this, this is known as bearish divergence, where price action is going to the upside, RSI is coming to the downside, and it normally signals that you're gonna have a period of at least sideways action at best, and maybe a reversal in price action. We're seeing that. Now, in order to nullify this, we need some big catalysts, right? We need some big catalysts to break the pattern of this RSI, to push us back in the overbought territory, and send a big candlestick here to the upside. But in lieu of the data coming out, what is going to be that catalyst? What is going to be that news? Now, I know some people have been pointing to the fact that every so often we'll get a tweet from Eric Trump or we'll get something from Michael Saylor. My opinion is this is beyond that. For us to fuel the next leg of this bull run, it is no longer sufficient for us to have just $3.12 trillion in the market, right? There's $3.12 trillion in the crypto market. We hit a peak of, let me just give you the exact number. We hit a peak of 3.73 trillion at the end of December when Bitcoin hit some all-time highs. But we're not seeing significant capital inflows. Now, if we take Bitcoin out of the equation, like I've shared with you over a handful of videos, we're sitting at 1.2 trillion versus highs in the previous cycle, which were higher than that, right? So we're not even touched the highs of a previous cycle, which was 1.7 trillion. So there's a lot going on in that we're not going to really see the price impact we want to see in altcoins until we see significant inflows. And you have to ask yourself, where are these inflows going to come from? Because right now you're seeing a certain phenomenon. You're seeing Pump Fund and the Solana meme coins and all this stuff taking a lot of the liquidity out the market, right? We're seeing a lot of the money that would traditionally flow into altcoins flow into the Solana ecosystem. And that's having an impact on the good utility tokens. So let me take you back a cycle. If you were around in the previous cycle, you will know that the flow of money or people, if you went into your network, the way people would get, red-pilled on crypto was they'd probably play around with a meme coin, right? Maybe they entered through Doge, maybe they entered through Floki or Shiba or something. They were looking for like a 1000x gem, right? And so they start looking for these coins. But then quickly what you saw was they flow across into utility tokens. So all of those people who were looking for wealth in crypto, they were flowing their money into good projects, right? If you spoke to the average person in the last cycle, what are you invested in? They're telling you, yeah, I jumped into HBAR, I jumped into VeChain, I jumped into, all these kind of different tokens, Neo and Luna at the time, and they were looking for utility. They were looking for altcoins to add to their bag. Now what are you seeing? If you sampled people entering crypto now, bar the, few, because I know where we spend time in the crypto market, therefore maybe our sample set is different. But if you take the average person is still looking for meme coins Or if they're a bit more of a degenerate, they're in pump fund trading all these coins. They're trading Trump, they're trading Melania, they're trading Baron coin, or they're trading whatever other trend jumps up. They're just trading these meme coins which are spinning up all the time. They're in the trenches. Now, the problem with the trenches is, so far, we haven't seen evidence that those people are bringing that money, that gambling money, so to speak, into utility coins. So we're not seeing them come into your traditional projects, and therefore we're seeing that same money just kind of recycle around. So the only way we're going to see true upside here in this market is a real capital injection. And a real capital injection happens as the Fed reduces their monetary policy. And this is the only, and it's not the only in the sense that it's not good enough, but this is the saving beacon of why I think we're still going to have our powerful cycle. Right? If we didn't have this catalyst, I'd be feeling very nervous from the technicals and the way this chart is set up. And we're going to come on to some more technicals shortly. The main focus right now is we quickly need to get some rate cuts, and we need to hold fire until the Fed do what they do best, which is print money. And when they print money, and that's going to start with the loosening of the interest rates, the capital injections into the M1, M2 money supply is going to lead to a substantial amount of disposable income in people's pockets, and that is where you start to see money flow back into risky, speculative investments, such as crypto, such as the NASDAQ, some of the tech companies, etc. That's when we're going to do well. Now, if you go back to the previous cycle, when we started struggling on the Bitcoin price action, was when the exact opposite was happening. I was sharing videos saying, guys, this is a problem. Get ready. This is going to be a tough bear market because the Fed is sucking out liquidity from the market. They're raising interest rates. People will feel poorer. It's going to be tough times. And of course, we went from 69,000 down to 15,500. Now, in many regards, the pattern we're seeing here on the upside is suggesting more downside. And I've shared with you guys that I'm expecting at least a pullback down into the 89, 90,000 region. That would be lucky if we just come down there. Really, we never tested the previous all-time high, which we broke through around that call it the $71,000 to $73,000 region on Bitcoin. So I'm expecting that is where our major support is. Sorry, I just kicked the camera. So when we look at that, the only reason I'm staying super bullish on this cycle, it's not to do with Trump. Right? It's not to do with all these little things like, oh, Eric Trump is going to tweet, oh, Liberty Finance. It's not to do with that. The reason I'm excited about this market still, and I continue to hold, and I will hold and buy the dip if we come down to this 70,000 level, is because of that exact narrative. I'm waiting for the Fed to loosen monetary policy. And when they loosen, I need to be in the market. Now, there's certain smart people out there may go, okay, but if the Fed are not going to cut rates until the first one in June, because you can see that's where the first rate cut will start to happen. People are thinking it's going to happen in June, although some people are recalibrating and thinking it may get kicked down into the July the 30th meeting. So that's already been kicked, the can has been kicked down the road a little bit more, which is not great. Then why don't I jump out the market and then jump back in the market when it's time? I ain't about that life, guys. I am not going to risk it. When I've been DCing and adding to my portfolios, I'm parking these into long-term investments, right? These are long-term investments that when you look back in 2-3 years' time, you're going to laugh. You're going to laugh just like how I laugh with the 15,500 purchases of Bitcoin I was doing down here after Terra Luna, after Three Arrows Capital, after Voyager collapsed, after FTX collapsed. We're nibbling, right? And the same thing's going to happen here. I'm going to laugh when I'm nibbling at 70, 80, even at 90. I'm going to nibble some more Bitcoin and my favorite altcoins because altcoins are super cheap right now. And then when that powerful move comes back to the upside, as the rates start getting cut later this year and early into 2026, I'm going to be enjoying them, right? So it comes back to the cycle, right? And right now in the market, you're seeing that the market's starting to fear that fear. For a while now, we were in excitement, greed, and people were enjoying it because we're in this green territory here. Now we're starting to notch into fear. And let me tell you one thing, guys. This fear is nothing. As somebody who's been around in the previous cycle, real fear comes when you start to see some real black swan events. You start to see the price crash quickly down to 70,000. Suddenly, people are getting margin called. Suddenly, people are talking about, oh, what is Michael Saylor's liquidation price? People are worried about if Binance and Bybit and all these exchanges are solvent, and there's real fears around USDT. These are the real fears that if you've been in crypto, you know will come up. And that is when the fear and greed index goes into extreme fear. And that is also when I do my best buying. Okay, so this is all a game and of psychology and patience. And look, if crypto's not going to peak this year and it has to peak next year instead, so be it. I mean, if you're talking about generational wealth and you're waiting a year instead of selling your bags early and realizing a loss, that's just silly. So, to summarize, am I worried short term? Yes. Am I worried long term? No, because of the printing. But that printing can get delayed. Those interest rate cuts can get delayed. If we keep getting, economic data which doesn't suit us, Jerome Powell's going to say, nope, we're going to keep rates high because inflation's still strong, wage growth is still strong, so I'm not going to do some cuts. We need the opposite. We need that data to start improving in the direction that Jerome Powell says, yep, we're good. We need to cut some rates. From a technical perspective, on the weekly chart, look, the EMA ribbon starts here at 88. It comes down to 72, which also ties in with that region I spoke about testing the previous all-time high. I'm ready for that. I'm nibbling in this range. The lower we go into this EMA ribbon, I'm nibbling. I'm not nibbling up here just yet. I still think this is quite high and extended compared to what we get if we get a pullback. Now, incidentally, when we had these crazy 3 weeks here across the end of November into December, I said, guys, this is crazy. This never retested. We never created any scaffolding to test the previous all-time high. Now, that was fun at the time, but in hindsight, like I shared with you, that's going to now cause us a problem. That means that what goes up quickly comes down quickly. So let me just show you this on the daily chart. It means that if we lose support around this horizontal here, around 92,000 where my cursor is, guess what? It's a little bit of a free fall all the way down here to 71 where the next major support is. That's the problem we have, right? Because if we lose 72, which is about, 92, which is another 4.5% away, it can happen, then your actual big collapse is your next 25%. And that's where people are going to feel it. Because if people were top chasing at the peak on Bitcoin, and then you fall all the way down to 72, that's a 34% correction for them. So for those people foaming at all-time highs, they're going to feel it. Of course, if you've been around for a while and you were DCing at 15,000, 30,000, 50,000, even 60,000, you're going to be all right. The ones who always struggle and fearmonger and panic sell, they're the ones who trigger the liquidations. And the problem with liquidations is they'll trigger quickly. We've spoken about this at length on the channel. You may think you're safe because you started buying at 54. But once these guys panic and they sell and they sell and they trigger their stop loss, very quickly you get down to your level. So that's why I sit in spot for my long-term bags. I don't want to be sitting here going, oh no, we could be getting to my liquidation price at 54,500. Too much stress for me, guys. Life is too short. Right? I'm buying because I believe in this asset class. I think the top we touched at 110 is nothing. I think we're going to 250 and beyond. That's my thesis. I think fiat currency is trash. Therefore, I'm going to DCA when we go down to those levels, not panic sell about my leverage positions. Okay? So that's what I'm seeing here on the chart. Weekly EMA ribbon is the thing you want to watch. We've not yet touched it. On the daily chart, we've lost our daily EMA ribbon. We did that 4 days ago. So on the daily chart, we're bearish. Like I shared with you, RSI divergence. The problem is, on the weekly chart, we also have the same divergence, right? You can see this price action is kind of going to the upside on the weekly chart, and yet the RSI is going to the downside. That's a little bit of a problem. If we get RSI divergence on the higher time scale, it then suggests that we need a weekly pullback, which matches up with the narrative that I'm sharing with you guys, that we're probably very likely to come into this EMA room. Now, the saving grace is some billionaire comes out and buys some crypto. Trump pumps the bag, gives us a Bitcoin strategic reserve. Those are always the bull cases. But equally, there are bear cases as well. What if Mt. Gox want to dump? What if the US government wants to sell some of their Bitcoin holdings? You've always got these positive sigma events and you've got these negative 5 sigma events. Our job is to kind of ignore those because they're outlier cases and just look at the probabilities, which is that in all likelihood, we've struggled to break 110, right? We got rejected severely at that kind of 100 level this week as well when we tried to recover. And it looks like we want to come down to test some of these lower levels just to see where the support is at for Bitcoin. So there you have it, guys, my real honest take on the crypto markets. If you appreciate me just being transparent with you, sharing my research here ahead of a big crypto week, smash up the likes. Do not forget to subscribe. I will be sharing videos every single day this week, so make sure you've got the notification bell on because YouTube won't always recommend my videos to you. Thanks for watching, and I'll see you in the next one.